Okay, good afternoon, everybody. Welcome to the weekly take on the market. We got a new logo because it's now called MarketSurge. I will be your host. Oh, we got this out of order. The disclaimer, I'm not licensed. Nobody at IBD is licensed. Anything that I say can't be construed as investment advice. Please definitely do your own homework. Okay, I will be your host. My name is Scott St. Clair. I'm the manager of the premium product group here at Investors Business Daily. A tiny bit about me, and we're off. So we'll do market thoughts, industry groups, stocks to watch, quote of the week. We'll keep it all the same. So let's start with the market. Where is my browser? All right, so here is the NASDAQ. And not a great day today, one day into basically all-time highs. I think, you have to know that this is expected. Eventually, they just don't go straight up. And the animal spirits in this market have been fairly obvious, fairly evident. Stocks have done really, really well. And so I don't know what it means in the long run, just one day, one bad day. But the market looks like it needs to probably just take a little breath. Today will be a distribution day, as you can see, a reversal day, and maybe we come down and test the 50-day, which is 4% away. That would be the first test since the follow-through day. I guess it went above that. I wouldn't call that a test. A test would be, to me, on the way down. So it's been a fairly orderly, really good bull market so far. Normally, for me, this would be a shot across the bow, and I would get defensive. Lately, these signals haven't worked as well as they might have worked, 20 years ago. So I keep that in mind a little bit when I'm considering. I have some longs and I have some shorts. Just because I would be, if the market just fell apart here, which probably has like a 2% chance, but it's not a 0% chance, I'd be a little remiss with myself that I didn't at least put on some hedges because I just don't like to go backwards, and I'm peeling off on the way up a little bit. So I'm reducing my upside a little bit when I'm taking off good trades. I better definitely reduce the downside. Otherwise, I'm getting the worst of both worlds, if that makes sense. So I tend to cut them off a little too soon, but I also tend to cut the losses really quickly too. And that protects me on any kind of downdraft that might occur. Maybe we just get something as simple as this. Here's the pink line is the 21-day. We're 1% above that. And since the follow through day, you've had, what's that? 1, 2, 3 closes below it. Couldn't close below it. That is a single close below it, although barely. Market gapped up the next day. You got a single close below it there, although barely. Market gapped up huge the next day. This looks probably like the NVIDIA earnings news. And then you had a touch, a kiss right there. And so we haven't even broke the 21-day. I don't know, certain we're even below the 10-day. No, we aren't. We're 0.1%. It just goes to show you how strong the market has been. But the leaders, well, the leader, NVIDIA, which will show, had a little bit of a reversal today. I don't know what SMCI looked like. I hadn't been watching that today. I was so focused on NVIDIA and some of the others that I'll pull up here. Let me add this to list, SMCI. So I'd definitely be curious about that. So it just depends on your style. If you're active like me, you tend to take these, one-day signals and, either reduce or put on some hedges by being short, whether it's the indexes, which I am as a hedge, or individual names, which I have, I guess, a synthetic short in NVIDIA that I put on today via options. So let's see how it plays out. The S&P, not as bad. The Russell, doing what it does, breaks out and pulls back. Not my favorite index. Maybe it will finally uh, fool me and run. I just don't. I'm not the biggest fan of the way this index is constructed. The two biggest names I'm fairly certain are SMCI and Celsius. Two great names, two great stocks, and eventually SMCI is going into the S&P, and I can say with a pretty good confidence that they will remove it from the Russell, although they don't have to remove it right away. I was reading because I was curious how it worked, but they will remove it from there. And so you're removing one of the best stocks. That's what makes on a side note, that's what makes the S&P and the NASDAQ so difficult to beat for professionals is they add to their winners and cut their losers. They allow the Apples, the Googles, the Nvidias to become a greater and greater percentage of their portfolio. And if something isn't doing well, they don't cut them as quickly as we do, but they move out stocks that aren't acting that good, or if they get bought out, or if they were to somehow get delisted, a going concern type stock, they would remove that. And so they're watering their flowers and cutting their weeds, and it looks to me like the Russell sort of does the opposite. So there's that. Oh, I wanted to look at on the index, well, in the overall market stocks, gold. I do have a position in gold via an ETF, and just kind of quietly, 1, 2, 3, 4, 5, 6 days up in a row. It never does that hardly. It's always as soon as you think it's going to go well, it turns tail and runs. So it's been a frustrating instrument, I guess, to trade. We've talked about the mother of all cups with handles, I think is what Jim Ropel will call it. It sure looks good, but I don't know. Is this the time that it finally does what we think it can do? So that's and Bitcoin, which, well, I guess we have the ETFs now, just like a champ. It just doesn't look like there's anything wrong there. I do not have a position in Bitcoin, unfortunately. I missed this trade, but that sure looks strong. So curious if gold and Bitcoin just keep going and going, what's the story they're trying to tell us? What's the narrative from a macro standpoint? The obvious answer is, the government's going to spend, the Fed's going to cut, and debase the dollar, blah blah blah, all the stuff that you hear. That's the simple answer that you might find on Twitter, and maybe that it is that simple. We'll just have to wait and see. Okay, let's go to the oh, I have some slides. I'm a little discombobulated with the new take on the market slide deck. So sentiment, no surprise, pretty exuberant. Let me make sure I say this right. Sentiment follows price, not the other way around. People don't get bullish and then jam the market up. They get bullish because the market is going up. People don't get bearish and then sell. They get bearish because the market is going down. And the more it goes down, the more bearish they get until it hits just kind of a breaking point to the downside and to the upside. The upside breaking point doesn't work as well. They can stay. You see like these alligator jaws that we have going on here with the sentiment, bulls going up, bears going down. If this was reversed, I would be wildly bullish. If with this type of alligator jaws, I would say, boy, you're getting stretched and there's a rally coming. It doesn't mean that a sell-off is coming. It just, for whatever reason, it just doesn't work that well. But I don't want to ignore that. So sentiment is pretty stretched. This is the Investors Intelligence. This is the newsletter writers, which you'll find on investors.com. Here is the AAII numbers. I apologize, I don't have a screenshot for AAI's logo. I definitely want to give them credit. This is their screenshot. And I think I saw on Twitter somebody said it was they called it unusually high bullishness from a historical average. So the 1 year bullish high, we're not that far off of 52.9. So we're at 51.7. Although you'd had the tiniest increase in bears, still very, very low, 21%. And if we were to pull up a chart, November 1st, 2023, let me pull that up. I think I've done this before, but let's see how this looks. That was the 1 year high in bearishness. Let's see what the market looked like on November 1st of 2023. So sentiment is pretty stretched. I think we all can kind of see that. And so a shakeout, a consolidation, a pullback, whatever you want to call it, would be warranted. It would not be out of the ordinary, and it would give you some setups. There aren't any setups because the best stocks aren't going to set up if the market's going up. The setups that you might see now, I'm wary of them, especially if they're in technology areas, because why is it setting up while the market's gone gangbusters to the upside? All right, let's pull up the NASDAQ again. And what was the date? November 1st, 2023. Oh my gosh. This is going to be golden, isn't it? Don't we know? I think I've done this before, so I'm sort of cheating. I knew it was going to be good. November 1st, 2023. Right there. 1 year high in bearishness. So sentiment works. It just works only one way. Can it work this way? Sure. It's just not as good. Like, look at the turnaround right there. All right, so let's go to the industry groups. And before I there's the ants list right there. I will talk very briefly about the new features, but there is a webinar on IBD on Wednesday. Myself and Jonathan Howard will do a webinar, and we will dive deep into the new features. Also, Sonny on the MarketSmith team did a webinar last Tuesday about the features. So we will give you as much as we can about the features from the webinar standpoint. So I want the industry groups, and let's sort them by industry group rank. And computer hardware peripheral is number 1. So that's Dell, that's SMCI, doing really, really well. Software database. Interesting. Oracle would come to mind, but I just don't know if Oracle is like a leader anymore. Semiconductor fabless, apparel, shoes, Deckers, on. Even Crocs has kind of perked its head up and looked interesting. Semiconductor equipment, biotech, building maintenance and services, interesting group. Building construction, pull this up a little bit. Finance, credit card. Remember we talked about this 2 weeks ago, the jump in the group, the strength from 179 to 9. That's like Square, etc. Computer software, financial, medical, long term. So 29. Well, this is the number of stocks. I don't want to get distracted by that. So 3 to 29 to 12. Transportation, ships, shipping, building, cement. So energy, coal has kind of lost its way finally. Alpha Metallurgical had a kind of a climactic run and had a bad day. So the groups are fine. There's not a whole lot there. They're pretty diverse, and I've thought that for a number of months. So there's nothing wrong with the structure of the group. Really, what I'm looking for is I want like growthy type groups to be in here. I don't want to see a lot of gold, mining, REITs. What else would medical, long-term care? I don't know. Would that be considered defensive? Probably a tiny bit. Have to dig in to the stocks that are in there. All right, so let's talk about the stocks. Should we start with the best one or work out? Let's just start with, so start with NVIDIA. And you had, so since this base, this little parachute is telling you it's the largest volume since this base. So you had quite a day. The volume was up 130%. You have an outside day down. In other words, at one point you were up, and then at the next point you closed lower than the previous day. And normally I would say this is going to lead to some type of consolidation, correction, pullback. That's normally what would happen in something like this. It was getting ahead of itself. I think NVIDIA was like, yeah, I think it gaps up like literally every morning it was gapping higher. And last night it was down initially on the Marvell news. I think Marvell and somebody else reported. So I think it was down like $20 or maybe less, not that quite that bad. But then it overcame all that, and by the end of the night, it was up 20. It was really pretty amazing. And then so it opened up 20, and at one point, I think it was probably up around 40. So if it closed at 926, 974, yeah. And on IBD Live, I basically said, if you don't have offensive sell rules, or if you're not selling NVIDIA here, or at least trimming, then you don't have offensive sell rules for NVIDIA. And so that's fine. Maybe if you own it at 500, 400, 300, 200, just want to own it and own it and own it, great. But I would say batten down the hatches, because they just don't go straight to the moon. This is as close as they get to going straight to the moon. This is a really big company. So this is a really unusual action. I had this trend line drawn. I felt like that was where I was going to sell it. And then I just kind of lost my way and just had a hard time thinking that it could get there a few weeks ago, but it got really, really close. And so that to me is, it's a bit climactic, and it needs, I don't want to say it needs a base, but something like that. I would say like a 20% correction. My target, you see this black arrow here, that's down 20% from the high. I think is that another 100 points from now? 780. And that's where I will get interested again, back to the upside. I'm not saying it has to go to 780, but I'll wait for it. If I don't get it, I don't get it. And that's kind of based on the precedent for Qualcomm. I think I need to be more like November 1999. This day. So this looks very much like NVIDIA now. And then you get this day. So it opened higher. Then at one point it was outside day down, though it didn't close there. And then boom, boom. So 406 down to 328 was 20%. That's kind of my precedent. So I'm thinking, hoping, crossing my fingers that it does exactly that. And then if it follows the Qualcomm precedent, which I don't know, it's another, I don't see why it can't, it goes bananas again. So if it does something like this, you can get kind of like a shelf. This isn't a great pivot, but in a big bull market, that's good enough. And look at Qualcomm right into a 4-for-1 split, got climactic again, and then that was the top. NVIDIA is a much bigger company. I just don't think it's going to do it this quick like that, but it could do something similar over a number of weeks to months versus days like Qualcomm did. All right, so let's go back to NVIDIA. Oops, I need to reset it to today. So I'm looking for a pullback, but we'll see. So NVIDIA, scratch that one. I mentioned Marvell, which announced no position. And I do have a position in NVIDIA synthetic. I think I mentioned that. It's an option related position to the downside. That's how I would win. I put it on today. NVIDIA, Marvell. So, it's not a great report. It's not that all that exciting. Avago. So a little bit better. And they said some things in the conference call which were perceived by the market as bullish for Nvidia, and that's probably why Nvidia went from down to up in the after hours. But probably needs some time. A little tired. Uh, Marvell, Nvidia. What else? IoT broke out today. I'm curious how it ended up. Actually acted really well. Held up. Relative strength. This will improve, but it's only 83. Why is that? Because as the market's gone up, it's gone sideways. And the last, although this one worked for somebody like me, I would make money in this. I think I did make money in that one. I remember buying it that day on the gap up after. But here, this didn't work. This one, I would say didn't work. So last two breakouts haven't generated any upside. So that's the only thing that kind of keeps me on the fence a little bit. You had snow. So you had the breakdown in snow on the earnings. This is really not I mean, very unusually large bad day, down 18%. So I didn't expect that. I got hit in the snow. Uh, I knew there'd be some volatility, but I didn't expect 18% downside as the risk, obviously. Otherwise, I'd have stepped aside. But I usually know, okay, up or down, 8%, 10%, something like that was kind of built in for me on that one. So it's not good action. It just keeps trending lower. And then the cyber ones, my favorite is CrowdStrike and gap down on the Palo Alto earnings held really well. Gap down again, held, gapped up on the earnings and gave a lot of that back. So this looks tired to me. There's nothing wrong with it if you want to hold it, but for me, I'm just like, I think it needs a base. One thing about CrowdStrike, it just never builds a base. It was one of those tough stocks. Like, I remember owning it here. It just really didn't build a base. But you could see, like here, look at, kind of had that same kind of thing on earnings right there. Kind of a weird weekly bar, stair stepped higher, corrected, and then continued. And there's the earnings line, which is, this is what is I really love about the earnings line, like visually, like just just stair stepping higher, 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 doing their own thing. The company's just, slowly but surely building on what they're doing. Tesla, I don't have a position in Tesla. It looks like a short to me, but there's a guy that I know he's long Tesla, and he's a great trader, and I just don't like to fade him. I just don't see the point. So even though I've wanted to be short it, I haven't been. And it helped me. Like I covered on this day when he told me he was buying it. I covered that day, so I was really glad. But then, I probably would have put some more on here if I didn't know he was in it. So that's fine. But not acting well, and the relative strength is super poor. Uh, and speaking of relative strength, that not something that I use, but I guess I heard on a podcast yesterday that the RSI on Apple is like at a 25-year low. Now we use RS rating different than the RSI, but the RSI is basically saying Apple's as weak as it's ever been in the last 20 years, like from a relative strength indexing. So I find that interesting. And if the market wasn't so good, this probably would be something that I would be shorting, but it hasn't been worth the effort to watch that because of the market. What else? Let's quickly go. Meta, just a beast, acting great. Probably the second best stock in the market considering the size and the quality of the move. Coherent is something that I do own. Tried to go up today, and weakness in the market kept it from doing so. I still have a position. Let's see. Coin and MSTR just going gangbusters. So you got the 44% is where it topped out at. It's all Bitcoin related. So I don't know how you would play that short of just the animal spirits in Bitcoin. Look at MSTR, just really, really strong move. So those are the Bitcoin trades. ANF. So it finally broke. I think I had, yeah, you can see, look at that. Look at the trend line I had. And I thought about shorting it, but then they had earnings coming. And so I just waited till the earnings came out. And again, I shorted it and just didn't have that much interest in it because of the market. It just felt like why? How much juice is in this squeeze, so to speak, with the way the market is. But that looks very like a sell signal to me, very high trend line, unusual action, and you get a big bar down. So I think that would be an offensive sell. Micron. So chips acting really good. SMCI, we talked about that one. I was actually up today. So it's going to go into the S&P. I don't know when, maybe next week, maybe the week after. So it's probably going to be difficult for it to go down till at least at the bare minimum once it goes into the S&P, because there's some funds that are probably trying to get their proper size position. Sell H, great breakout, doing nothing wrong. Really strong day today. And Dell undercut that gap, which is good. Probably got a little shakeout. Anyone who bought the gap is probably shaken out. So I think I'm going to set an alert like that and see if it can go sideways. Love for it to kind of just drift like that for a number of days. I think that'll do it for the for the stocks to watch. Industry group stocks to watch. All right, so we have the quote of the week, and I was reading Inside the House of Money again, or actually was listening to it on Audible, and I like the Jim Leitner quote. I'm very risk neutral and focus on both sides. What I was saying is that humans in general are biased to look for confirmatory evidence. So when we buy something, we're always looking for, why it should continue to go up. Very few people train themselves to look for disconfirming evidence, like why might this idea not work? I have to continually train myself to ask why I believe something is going to go down, if it's long it, I presume, not why it should go up. So you always have to have an idea. Somebody's on the other side of that trade. It's kind of like stocks with big short interest. And like I've never had good luck with stocks with big short interest, because it's always bothered me that so many people want to be short that stock. Why do they want to be short it? What do they see that I don't see? And so that's kept me out of some big short interest type stocks that, where there's this huge bull bear debate, like an Herbalife or something like that. So it's good to have an idea on, why might the idea not work? I do this all the time. I buy something, I like something, I go on YouTube, Coherent, for example. I watch all these videos on what they do, and I listen to the analysts, and it's all bullish. Everything's bullish, which is fine, but I have to have some understanding of the other side. Why might it not work? And that's also why we have the stop loss. Okay, so contact information, 800-831-2525. Our new email address is marketsurge@investors.com. Please use that one. The other one does work, but eventually it won't. So, and like I said, next Wednesday, I believe near the close or at the close of market, we'll have, IBD is having a webinar hosted by Jonathan Howard. I will be, I guess, the guest, sort of. And I'll dive into these new features, how to use them, what I like about them, where to find them, how they're crafted. We'll dig into the weeds a little bit, and so you guys can understand what those bring. Have a great weekend, everybody, and hopefully we'll see you on that webinar on Wednesday. Good night.